we are doing really good for numbers. I'm just going to leave it maybe 10 more seconds as that number keeps going skywards, which is wonderful, and then we'll get started. Okay, fantastic, lovely. Very warm welcome. My name's Jane White. I'm the Executive Director of Ord, and I am joined today by colleagues from the EAUC, Fiona Goodwin, from BUFDG, the Finance Directors Group, Carol Thomas, and from our colleagues at Energise that have helped us together to put together this fantastic project, report and tool for you that we're going to be talking about today. Usual Teams kind of housekeeping applies for us. So we will be recording the session and that will go onto all our membership websites for you and your colleagues to refer back to. Please do keep your microphones onto mute just to help to protect the sound quality of our speakers today. But do leave your cameras on. It's lovely to see your faces. We will be using the chat function, so do make any questions, comments or observations in there. And do also feel free to raise your hand and we'll invite you in to speak and ask questions as well. In terms of a format, I'm momentarily going to hand over to Fiona that will give you the kind of the depth and the breadth of the project, where it's come from and where it sits in kind of a huge suite of work, of course, that's going on this important topic across our colleges and universities. And then we'll move on to Energise and have a demonstration of the tool, leaving some time at the end for Q&A. All right, that's enough from me. Fiona, over to you.
Thanks so much, Jane. Hello all, good to meet you all. So where did this all come from? You may remember back in January, we launched a report called Accelerating Towards Net Zero. That report was in a project that was developed by the Royal Anniversary Trust, which was part of the Queen's Anniversary Prizes and had about 28 universities and colleges all over the UK and Ireland in terms of building into that really good report. I'll put a link in the chat to that report in a moment. So from that, we actually worked out what the carbon footprint for the whole of the sector, so that's HE and FE, across the UK, which come to a whopping 18.1 million tonnes CO2 equivalent. So that was really sort of how we can get there. You know, what is the carbon footprint of the sector? What can we do to decarbonise that? And how we can all collectively get towards our net zero targets. As part of that project, we also developed the standardised carbon emissions framework, which again was collectively done with the sector, very much working closely with Ord and with BUFDOG and UK and Association of Colleges, etc., lots of sector bodies involved in that with the full consultation to the sector. So that from that, we've now got a common agreement in terms of what aspects we should be including in all of our carbon footprints, where within the greenhouse gas protocol they should all fit. So that was really, and the key word for that is standardised. So basically everyone is now going to be measuring and hopefully reporting in all the same way in all the same areas. So that really helps the sector for us all to sort of benchmark, to also share good practice and so say, right, that person has got doing really well in this area. How are they doing that? Let's go and talk to them. So it's really about helping us all together collectively about that. So that's great. So we now know what the carbon footprint is. We've now got a standardized framework for everyone to use. So the next bit is actually how do we finance to get there? So many of you will have a net zero target. Many of you may have a plan on how you get to that target, but we feel that most of the sector don't really have a very clear financial budgetary plan to enable that plan. So this is a really crucial part in that. And it's a really, really complex area in terms of, you know, a lot of it, it's either new technology, we don't even know what we're doing yet, so how can we put a price on it? But I think a key part of this is the longer you leave to wait, to take action, the more it's going to cost you. So that's got to be a really crucial message as part of this, is taking action as early as possible is going to be by far the most cost-effective way forward. And in order to get those big wins and efficiencies to actually reduce your costs. So energy crisis, prices are going up, you know, so making your campuses and your operations as efficient as possible is really crucial there for that. So this project followed on from that Accelerating Towards Net Zero project from the Queen's Anniversary Prize. We were very kindly funded by Ord and Buffdog and by the Department for Education to develop this project, which we worked with Energize, who will be able to get to the nuts and bolts of the project and the tool in a moment. So what is that big scary number? It's £43.8 billion collectively across the UK for HE and FE, of which 37.1 billion is for the HE sector. That is broken down, so a majority of that is to do with your supply chain, just over 29 billion, nearly 9 billion on the built environment, and just over 6 on travel and transport. So those are sort of the key areas that institutions can really look at in that. And the hope with this guide is, one, to really encourage estates people, finance people, sustainability people, all to work collectively towards this in order to develop your net zero plan, but crucially have a budget and a financial plan in how you're going to achieve that, because we're all aiming for the same collective net zero target around that. So that's sort of the real plan about that. So it's really about how we all work together to achieve those aims. So I will stop there and I will hand over to Energize to go through the report and the tool. Thank you.
Thank you, Fiona, and hello everyone. Simon Elsbrett, Energize, and I'm going to kind of walk you through the summary of what we've done with the project, and just follow on from the background that's just been given. So just share some slides on the screen to do that. Just the usual check if someone can put a thumbs up to check that, confirm that they can see that on the screen. Cool, great, thank you. Just to walk through, just to outline, I guess, the underlying purpose of the project in terms of what we were trying to do. So the critical part within terms of being able to establish the cost and walk down the journey was to clarify the scope and the kind of, I guess, a conceptual roadmap as to how the sector can progress. Now, we'll talk later about what data sources we've used for that in terms of the assumption, but it's useful to clarify at the beginning that the work done covers scope 1, 2, and the upstream 3 elements of the sector in terms of the cost. Notable that there isn't an estimated cost for the downstream 3 elements, largely because those will wildly vary from institution to institution based upon what that institution does. So for the carbon accountants out there, it's scope 1, 2, and upstream 3 in terms of what we've walked through. And ultimately, one of the aims is to establish a journey within that. And when you see the calculator, you'll understand what we mean by kind of being able to outline what that roadmap of actions is. And obviously, to align to the work that's already been done, it was really important that all of this aligns to the standard carbon emissions reporting framework. And again, when we get to the calculator, you'll be able to see how that aligns up. In terms of the project outputs, clearly, obviously, as Fiona's just walked through, one of the things that's been calculated is the total cost of the sector. I'll run through the caveats to that number in a moment, but it's still a very, very large number in the overall equation of things, and there's quite a bit of top level insight within the report that's been published behind it. There is, within the work I'm going to run through in a moment, a decarbonisation modelling using the Royal Anniversary Trust report, and within that kind of a strategic analysis of the cost. And then contained within the calculator, there is a set of there's an opportunity list for the sector, things to consider for certainly those at the earlier stage of the journey, so that you can see kind of how you might be able to implement some of the more tactical elements of this. I guess critically, the calculator is there for institutions to be able to identify cost and look at some of the planning that sits behind this. I guess just in terms of who might use it and pieces, part of this is to support the fact that people are in different places around their costing journey within this, but I think it's important, and the kind of primary purpose of the project in the first place was to ensure that there is an ability for everybody to get an understanding of what those costs look like and start the journey of planning. Some institutions have done their own planning. I think even in that circumstance, we're hoping that this will provide some useful resources to potentially fill any gaps in that, or benchmark it and all those pieces. Anyway, top level outcome, Fiona's just summarised, but calculation is 43.8 billion for the collective HE and FE sectors, 37.1 of that for hire and 6.7 for further. Again, just broken down between supply chain, built environment, and travel and transport. We have sought where we can to align all of the analysis to the same categorisation of the Royal Anniversary report that was produced earlier in the year, so that you can effectively see this report as a follow-on to that in terms of the categorisation that's been used within that report. So top level kind of summaries in terms of where the focus areas are. One of the immediate questions many will ask, and I'll try and summarise it at a top level here, is the logic that's been applied in terms of walking through to arrive at that number. There's an awful lot that sits behind it, but I guess just as a high level view, in terms of understanding the sector's total cost, obviously that is driven in part by the carbon footprint figures that we've talked about that are in the Royal Anniversary Trust report. Within that, we've obviously then had to make decisions about mapping the opportunities to that footprint, so that the understanding of kind of the approach that sits behind that is there. It is clarified later in terms of just the background of it, but where possible, we've used assumptions that sit within either the 6 carbon budget from the Committee on Climate Change around the pace, or we've used the National Grid's future energy scenarios. And for anybody who's particularly familiar with that, it's the system transition modelling that's been used within the data sets that sit behind this. Where there isn't an answer within those, there is modelling we've done ourselves. That's particularly around some aspects about exact approaches to decarbonising some of the buildings and some elements of transport. And there's also a few elements on the supply chain that, just for visibility on those, without going into too much technical detail, where it's related to a building and or transport, we've modelled some of those pieces, and the software we use for that is mentioned later, just to clarify. And we have a kind of, for anybody who's not familiar with Energize, we're been around for 15 years. We have a team of 40, and we have a client base that covers pretty much every sector of the economy. So some of the supply chain understanding has been brought in from our work elsewhere to be able to map out what that decarbonisation looks like and what the cost modelling is behind it. So there is kind of cross-pollination, I guess, between sectors there in terms of the approach. Ultimately, what we've done is mapped that to the footprint of the sector, built kind of a typical business case against an archetype institution that you can probably figure out. There's quite a lot of this, which is statistical analysis. That ultimately gets us to a benchmark cost rate per tonne, and then using the carbon footprint, we're arriving at an overarching figure. And the calculator allows you to project that for your own institution, and the scenario model that we've built projects that for the sector as a whole. On that point, just mapping through what that looks like in terms of the current projections, if you were to look at it overall, for anybody who's kind of interested as to what pace that looks like in terms of the sector's overall emissions, then this is a kind of scenario model that feeds through from those respective categories. I'm sure some of you have already spotted that student flights remains a fairly stubborn figure. I guess immediate point is to clarify that this is the carbon footprint of the current sector dynamic structure, and it's very difficult to put a kind of any changes that might happen to the sector, I guess, if that makes sense. So the figures are projected based upon the current basis of the sector and carried forward, and as highlighted, using those respective data sets with the 6 carbon budget and the National Grid future energy scenarios data sets. So for anybody who's not familiar, that data set projects the adoption of certain technologies in buildings, the adoption of electric vehicles and so on in detail within it. So you can use it to identify the pace of transition within society. So the direct emissions and purchased energy are probably not unsurprisingly the areas that decarbonise first and are people's priority attention areas, but obviously the supply chain improving as society in a wider sense changes, and grid decarbonisation flows through systems and manufacturing and all that walks through. One of the most important parts of the project from our point of view was to make sure it was able to be usable at an institutional level, and therefore one of the things that's a critical output of this that I'm going to walk through in a moment is that we've created a calculator resource that allows you to put your own carbon footprint in and produce your own analysis as an outcome. That report is a kind of to bring to life the content of the report, and as I'll show you in a moment, the calculator has worked examples and guidance throughout in terms of how to use it. We have had a variety of people across the sector test it, and thank you very much to everybody who's been involved in that. It's been a very helpful exercise in terms of ensuring that it's going to be a tool that supports the sector over the years to come. I guess just high level, the kind of outputs that I'll show you in a moment is that it is a top level set of analysis in terms of figures, but there are a set of key charts that come out in the analysis of what the likely investment per year and the emissions projection is. So if for anybody who hasn't as yet done that kind of modelling, that hopefully this tool will form a part of that. And certainly for small and medium-sized institutions, we're hoping this resource will potentially plug a gap in the landscape of overall planning that there may not currently be a solution for. It is, I guess, repeating the point around the standard carbon emissions reporting framework that Fiona highlighted earlier. It is a prerequisite you've calculated your carbon footprint to that framework. But I guess one of the things we would highlight is that if you've only got a part footprint, you just have to acknowledge it's a part cost, because it will only give you the cost for the parts of the footprint you've calculated. I guess just a couple of key points to highlight. I said I'd kind of walk through a couple of caveats. So it's obviously, I've already summarized that the calculations are a kind of weighted cost per ton. That's the way the calculator works. So this isn't giving you an individual business case for individual measures. This is giving you a macro number about how to build more resilience and long-term planning into your institution's approach to this. It is quite critical within that to be aware that the figure that's within the report and the figure that would be there unless you use the calculator to make adjustments, the figure is the primary cost of net zero. And what we mean by that is there are no secondary costs that might come from implementing within, because those will vary pretty wildly from institution to institution based upon its age and structure. So if you have specific costs you're expecting behind improving the condition need of a building, including asbestos removal, any decant from buildings, decoration and making good, procurement costs, different levels of unrecoverable VAT, those are things that you need to make individual adjustments for. The calculator does provide for you to be able to do that, but those will be things you'll have to make an assessment at your own institution level. And it's worth bearing in mind that there is a caveat to the 43.8 billion number, which is that it doesn't include those for the sector as a whole, which obviously will mean that the overall cost of delivering this will be higher than that number. But we can't attribute that figure because there is no centralized data set on the condition need of the sector, and a whole series of things around buildings, and therefore there's a whole series of things within this which would be beyond a statistical analysis and would be more like a guess. And we felt that therefore the correct boundary is the one that's outlined here in terms of on this summary. Just very briefly to reiterate those data sources I highlighted before, the data sets that we've used behind this are principally future energy scenarios from National Grid, the 6 carbon budget, and the modelling we've done where it relates to a building has been done on a piece of software called Red Screen Energy Management. For anybody who's not familiar with it, it's produced by Natural Resources Canada, which is the equivalent of the Environment Agency in Canada. But it's globally used, and it's a modelling software for buildings. It's not 3D modelling, it's mathematical modelling, but it goes into quite a lot of depth around how some of those pieces are done. So anybody who does want to get under the bonnet as follow-on queries, I'll address how you send those queries to us at the back end of this run through. So I'm just going to run through a quick demonstration of the calculator. So just switch to presenting that.
Simon, we've had a couple of questions come in. Just sorry to stop you in your flow, but
Okay.
it's kind of relevant. So one was asking on one of the slides how student accommodation was separated out from supply chain and direct emissions.
So the student accommodation is a separate category under the standard emissions carbon reporting framework, and our modelling has treated that as an external cost to the sector because if it's not within the scope 1 and 2 emissions of the institution, it will likely be run by somebody such as UPP and other pieces and paid for by the student. So we have treated that as an external cost in the equation. I know that that's not a perfect answer in the equation of things. I think a lot of the decarbonisation approaches may be similar, but student accommodation is its category in its own right outside of the and we've treated it as an external cost to the sector in terms of the analysis. So because the institution is, unless it's within the scope of its scope 1 and 2 emissions, unlikely to pay for it because it would be funded elsewhere.
Great, thank you. And Kezi's answered the other one. Thanks, Kezi. So we're good to continue.
Cool. So I just wanted to walk through, we just wanted to do a walkthrough of the calculator. So just to kind of explain the structure of the tool, hopefully that's now showing on the screen for everybody and updating as I walk through. So there is the guidance tab at the front that explains the overall approach to it. We have tried to make it focused on who the user of each tab is. So I just wanted to explain before I start jumping through the tabs. The blue tabs are guidance for the calculator as a whole, and grey are relevant to the whole piece. But we're conscious that this tool may well be used by both financial personnel and sustainability-focused personnel within an institution. So to kind of try a bit of a focus on that, the orange tabs are focused towards finance and the green ones towards the sustainability team. Look, everybody's going to want to be able to use the respective pieces, but it's an element of being able to draw the attention to the respective areas, which is it was a piece of usability feedback in terms of the journey as we walk through. In terms of the overall approach that you take, the critical kind of prerequisites that you need to be able to use the tool, as is listed there in terms of inputs, you will need your carbon footprint. You will also need to have some steer as to what your planned decarbonisation approach is going to be. Now, by default, the answer would be the approach is 2050 as a deadline date, because that nobody's really going beyond that, certainly within the United Kingdom. So that'll be where it kind of the underlying structure you can put as a background option if you needed to, but I'll walk through in a moment. You can be quite specific about your own plan in terms of the overall underlying approach. Idea is, and I'll walk through this in a moment, that you enter your footprint, choose the scenario you want, and then you can tailor the program, including those markups that we've spoken about in terms of making sure that you're allowing for any building condition need, procurement costs, any other operational impacts as you walk through. Ultimately, the purpose principally of to get as an output is that it gives you a high level analysis of what's the figure. And now that figure obviously is an estimated figure. It's not worked through by doing an extensive investment grade audit program and all those other bits and pieces. It's not done by doing large scale feasibility studies on transport systems. This is to try and give the sector a tool to get further down the line of the planning, because one of the things that is quite significant and can be figured out by the total cost is the overall scale of this means that institutions need to do an element of financial planning about the order of magnitude of how much money is going to need to be set aside to address the challenge. And therefore, the part of it is about that. So it also highlights how this is about conducting planning and a scenario analysis, because the tool will provide you a emissions projection and financial projection so that you can have discussions between sustainability and finance teams about whether that pace and financial commitment is viable, or any actions that would need to be done to address that. As a key point before I start walking through the individual bits of functionality, There will be residual emissions left in terms of the way this is calculating, and those would need to be offset. Within the overall framework provided by EUC, there is a separate set of guidance around how to approach offsetting that's linked to in this guidance tab, but your approach to offsetting is, I guess, outside of this calculation directly because it's a separate piece as an institution to define. So there is a worked example that I'm not going to spend too long on this because I'm going to walk you through, but there is a worked example tab within the for the HE and FE as an example that will literally show you which cells you need to fill out and how you arrive at as a result within at the beginning of the calculator, and basically will show you how you get from A to B as a journey. So please do make use of that in the sense that it walks you through the different steps that you need to undertake as you go through the journey of using the tool. So we start off with the high level tab, which is a kind of critical part of the journey. We have aligned it to the standard carbon emissions reporting framework categories. You'll be able to see it split between scope 1 and 2 and scope 3 in terms of the analysis. What you need to be able to do to use it is to be able to enter your carbon footprint for whatever you're treating as your baseline period into the column, the cells that are highlighted. And then you also, kind of just in terms of explaining, there's a couple of other pieces just to get the best configuration out of it. There is something called a cost route calculation within it. So basically, the idea is a direct cost is something where you would make an investment and receive the return. An example being that you would retrofit LED lighting into a building. So then that's a capital investment for the equipment and an energy saving back. An indirect cost would be something like the supply chain, where it's more likely to be an inflationary cost. So it would be something that would increase your cost of operation, but is not necessarily a capital cost. And an external cost is something that's associated with reducing your carbon footprint, but not a cost the institution itself will absorb. So there is an ability to just have a definition of those as you walk through, and those are drop-down boxes to the side of each category of the emissions. We have also allowed for you to be able to state that you're partway through implementing the programs, and therefore there is a program implemented percentage that's able to be put in there because not everybody is at the beginning, so we need to allow for that in terms of the overall equation of using the tool. We have also, based upon feedback recently from EAUC conference, added the ability for you to put the total square meter of your estate so that you can create a benchmark of what your cost is per square meter. That hopefully allows institutions to compare one to another in terms of the overall approach. So if you put your total square meterage of the estate into cell D14, it will then produce the statistics that would potentially allow you to benchmark to your peers if you want to share the information. If you take this particular example, by putting the carbon footprint and all that configuration information in, it has given me an estimated figure out here that to decarbonize the 14,000 tons that are there, that I need to be spending 54 million on the scope 1 and 2 to decarbonize. And then if I scroll down, there's a secondary set of information associated with the carbon footprint that's been compiled for the other categories of the scope 3. Now, in this particular case, this is an institution that was probably part way through. This is a real institution's data, using an institution that's got about 9,000 students and 35 buildings, circa 90,000 square meter estate, just to give a yardstick. But by the looks of their carbon accounting, some parts of the purchasing are not currently in the footprint, to take as an example. So you're only going to get the full cost if you put the full carbon in. I guess that's probably an obvious point, but it's important to state it in terms of the overall journey as you walk through. So what you're ending up with is a total average cost per ton figure, but also what the estimated investment is, and that will break down by the respective categories about whether those are external costs, indirect, and direct. If you were to be preparing a capital expenditure budget, then our recommendation would be to focus on doing that aligned to the direct figure, but it's worth finance teams being aware of all of the numbers overall within this to be able to link in the financial planning. On the net zero target year tab, you can choose the year you're aiming for, and it's actually able to be done by category. So if, for example, you were wanting to remove natural gas from your estate, so say you said, I'll get rid of all gas-fired heating systems by 2035, you can choose to make that configuration to your model. And it can be independently configured from the other categories. So it can be done at a category level in terms of setting the targets. One of the pieces of feedback was that people are going to have different targets for different categories in terms of their overall target date. It therefore felt important to allow you all to customize it in terms of the overall approach. For those of you who are then potentially looking at this going, yeah, but I need something even more bespoke than that, we have tried to account for that. And at the bottom, you can actually put your own bespoke numbers in, and then the calculator will calculate through from those. So if you've got your own projections in terms of scenarios, then there is a table at the bottom of the net zero target year tab that allows you to enter in your own pace in terms of making the calculator work for you. What that ultimately then does is feed through into a program phasing calculation. So this is basically allowing you to understand where the costs will impact per year. And this is where those adjustment factors that we were talking about earlier would be made. So if you had a significant bit building condition challenge and you knew that you probably needed to add 50% to every, let's say 40% to every project, then you can add that as a inflation to the estimated cost. And the same can be done for all of the other points that we talked about in terms of decant and other operational impacts. So you can make that figure represent your institution's situation, but obviously there's a series of things to get an understanding or a feel of, but there's an element where what we want is this to be able to be used as a tool that somebody who has little familiarity could go in and do an estimation from day one, but also for those who are more advanced down the line can potentially use it for, okay, I've got all that information, I've got my own bespoke pathway, and I know what those uplifts are. I'm going to model my overall cost because actually I need to get to that overarching figure. So the options are all there, and you can see those explanatory notes at the top and up here as it explains about what all of those are, and it will carry forward into the respective cells for the forecast analysis. On the financial side, that then carries through to an investment chart, which will give you a year-by-year figure for the investment, assuming the target dates you've set. For explicit statement of it, the phasing per year is driven from the 6 carbon budget and the future energy scenarios piece. So it's basically saying society's average pace to hit that date would be this. So it's coming through from kind of national policy projections. What you've then got is the more sustainability side. So for anybody who wants to work on a carbon budget approach, then this tab would give you your projected carbon budget by year using the analysis we've gone through. So the emissions projection tab will outline that, again, using the same underlying logic, and carries that through and brings you analysis at the bottom about what your scope 1, 2, and 3 are on an aggregate basis, so that if you're using those for internal reporting, you can display that. A notable output of all of that is also that we produce an emissions projection chart as well, which gives the glide path of your emissions as you go down by scope, in terms of projecting the respective institutions' emissions pathway based upon what's been modelled earlier on in the calculator. To support those that haven't necessarily developed the full plan behind how you then deliver those, there are a few extra resources at the back of the calculator to support. And most notably within that, there are a couple of opportunity database tables that are split to scope 1 and 2 and scope 3, and are an itemized list of potential projects, and there are a few hundred in each tab, that basically look at things you could do to decarbonize that part of your emissions if you don't currently have a plan for it. And there are some tabs on the side here as to whether you would believe those are applicable to your institution, and any notes and comments you want to leave in addition. So we're trying to leave it so you can use the list. It's filterable, all these bits and pieces. So you can almost screen, yes, that's a project we're working on, bits and pieces. So it's trying to help not only do the top level planning, but to also help you be able to focus the minds if there are lesser there's less planning behind what initiatives could be put in place for those individual categories, and the same exists for things you can do behind down your supply chain for purchase goods and services, of things to be talking to a dairy provider about meat supply chain, the things that would decarbonize their supply chains, your supply chain through their operations. So there is a table in the back of a series of Scope 3 initiatives, and there is within these on both tables a top level summary of the availability of suppliers, typical action timeframes in terms of when they'll be available as technology, and then using an archetype institution, cost and payback ranges. Those will vary from institution to institution and context to context, but there's obviously the purpose of this is to try and give something that can be a tool to enable the sector collectively, and I think we're all aware that as people use it and provide feedback, there may be ways in which we can make this more tailorable to the different contexts everybody's got. But based upon the testing and feedback today, those have been useful additions at the back to support the understanding of how to decarbonise. It's just for reference at the back, there are a set of tables that outline the pace of decarbonisation that is assumed. So I'm not going to go through all of them, but just to show them as an example, if you were targeting a 2050 date, then the percentage reductions by year are in this table based upon what's in the respective data sets that we've just explained. So if you did want to do your own analysis independently, the source data is in the back of the calculator to provide you that transparency. We didn't want to excessively lock content within this down, because it's there to be a resource for the sector and trigger collaboration and conversations around a topic which in relative terms is very early days for the sector overall. As far as we're collectively aware, there are only a handful of institutions that have calculated and published what their cost is overall, and this is to kind of form a contribution to that evolving. So just to jump back to the slide deck for a moment, just to finalize what I was walking through, and then I think we've got a Q&A section. I mentioned the institution size before, about 9,000 in terms of the example I've just been walking through, but it's more relevant for your own institution to walk through it. So I just guess to summarize, there are a few key takeaways that we'd highlight for the sector, and then there are some recommendations for each institution about what to take out of what we're running through today. I guess the themes overall that we've highlighted are there are some questions for resilience of the sector overall, the scale of investment required. I think does the sector have 38 billion in its back pocket today to be able to pay for it? I think the simplistic answer from unanimously would be no, and that obviously needs to be in a fixed time frame, and is there if you divide it over a period of time, a significant chunk of the overall sector, and I mean, when I was with another call about this topic a few weeks back, there was the figure is roughly the overall turnover of the sector. I think was the yardstick figure that was given. So on that basis, it's 2-3% of the turnover of the sector every year. So it's a substantial investment, and making sure that there are conversations about resilience to implementing net zero is a really important thing for every institution to get ahead of, and for the sector as a whole to move forward. I think a really important part of also moving this forward is, given the understanding of the order of magnitude of the cost, it's really important to be talking now about collaborative initiatives that might be able to bring that cost down or make it happen faster. So it's important to ensure those collaborations are there. And then there are other discussion points around how potentially this information can be shared over time, and actually one of the pieces that came out of the EUC conference discussion on this was that square meterage figure, so that there is a benchmarking consistency to allow something to be used, particularly on the built environment figure, for there to be able to be a comparability from one institution to the next. Just as an individual institution level, I guess our underlying kind of recommendations would be, if you can review the findings of what's within the report, And then if you've done your own analysis, then I guess there's a recommendation to use it as a benchmark. If you haven't done one yet, then use the calculator to understand. And if there are any areas where you haven't got confidence about the carbon reduction plan, the database that's within there about being able to support selecting further measures and how those can be progressed over time. So hopefully that's been a useful walkthrough of the calculator and the context of the project and the outcomes that come from the report. And I will pass back over Jane for the Q&A session.
Fantastic. Thank you, Simon. So there have been a lot of questions coming in, but thank you to the Energize team and to those that are already using the tool for answering a lot of those already. So as my brain works as fast as it can, I will try and only bring to you questions that haven't been answered. There's a couple of questions that kind of bring in the lines of how things cost abate over time and whether that's factored in. So things like the falling capital cost of heat pumps and batteries, etc. And also one on carbon intensity factor increases, such as a recent 7% increase in CO2 intensity in the recent DEFRA release. So how are we accounting for these kind of evolving scenarios?
So I'll address the forward-looking cost one and then the carbon factor one. So the forward-looking cost one, the analysis has been done at a point in time, and you can't fully account for all of those future projections in terms of decarbonisation of some of those technologies. There will in reality be a number of them in terms of the overall equation. The projection is based upon today in terms of the figures that you would have behind that in terms of how we've arrived at those benchmark costs. So there is a need for a consideration of kind of what might change over time. Obviously, as a resource, hopefully this becomes something which is kind of used and evolved and updates within. And I think that kind of links within to the secondary point, which is carbon factors around the approach that have been used in the assumptions are when the analysis was done, which was prior to, just so everybody's clear on it, it was concluded just prior to the latest statistics release from the government in terms of carbon factors. So the adjustments that would come in now for the updates that were released in June are that they would cause a variation in the overarching, but that some of those went one way, some of them went the other if you take the overall analysis of things. So hopefully that provides an answer to both of those points.
That's great, Simon. Thank you. Fiona, there's a question in here that talks about is there an expectation that HEIs and presumably colleges would be required to submit the tool or something similar at some point? I think that opens up quite nicely as being able to address the recent carbon reporting framework Scope 1, 2 and 3 and whether it's mandatory and is it likely to become mandatory. Do you want to make a comment on that?
Yes, certainly, and I'll try and be as succinct as possible. Firstly, education is a devolved matter, so it does depend in which nation you are in. With the standardised carbon emissions framework, the Department for Education have said this is not mandatory as yet, underline the yet, so it will be coming, but just not at the moment. The reporting mechanism for this is being developed by HESA, now JISC, so they will be updating the EMR, sorry, lots of acronyms, Estates Management Record to be aligned with the standardised carbon emissions framework for the carbon elements of the EMR. The non-carbon elements of the EMR will be updated as per ORD's consultation previously. They are just literally working on this as we speak. So the aim is that the data collection will be ready for in early 25, which will be for the year 24-25 academic year. So and there'll be a consultation beforehand. There will be lots of tools to help you engage with that over time. hopefully in the next coming weeks, they will be able to publicly say that. At the moment, the funding hasn't been 100% confirmed by the DFE for that. So this is with lots of caveats to be confirmed, but that is the timescale that is aimed at the moment. So that will be coming. As I said, it's not mandatory for England. For Scotland, it is mandatory, and the Department for Education and HESA are liaising with the Scottish Funding Council and the Scottish Government on that to make sure it aligns with the mandatory reporting requirements. And the same in Wales, and again for Northern Ireland, it's not mandatory. So it's a bit of a mixed bag at the moment. But the tool will be on a new platform, and it will be accessible for both HE and FE. So FE can't access the current EMR, but the new tool will be on a new platform and be fully available for both HE and FE. Hope that roughly made some sense.
It was perfect. Thank you very much, Fiona. Just coming back to the tool, Simon, I'm just going to link two questions together. But on the example scenario, there wasn't a mention of staff numbers. Is that intentional, and is that something that could enhance defining the institution? And also, is there a way by which the tool would allow us to feed in our actual costs if we have them in certain areas?
So the staff figure, there was an ambiguity on it in terms of the bits and pieces. It doesn't actually affect the model in terms of the overall equation of the figures that are there. It may be a useful metric for you to do, I guess, in terms of cost per head or various pieces of internal reporting. But we've focused on putting in a benchmark metric for square meterage into the actual tool itself at the moment, because that feels a more appropriate overall one. It may be over time that it's clearer that having per student or per domestic student, or just there are various metrics which I think your feedback over time may make it clearer. And one of the things that's important is to make sure that they're going to be things which do directly correlate with the cost, so that there are the figure is valuable, I guess. So I think at the moment it's just the square meterage value that's pertinent in terms of the points that's there. The secondary part of the question, sorry, I've spent so much time focusing on that one. Just the people at home, their own costs was the other part, wasn't it,
yes.
Jane? Yes. It's possible, because we can just tell you where the figures are in the analysis, and then they can be overwritten, I guess is the underlying point. In terms of the structure of things, we've intentionally kept the workbook because of the, I guess, commitments we've made from the beginning that the analysis we're doing here is as open source as possible to support us the sector. That that analysis could be overwritten. I think that's probably a follow-up piece for us to write into FAQs in terms of some pieces, and I think it's just useful to touch base on as we are getting questions and we understand the kind of where the focus of insight is. We are consolidating those FAQs over time, and we'll share those as a kind of secondary resource. If anybody's got any other questions that come to light in the days ahead, if they get sent to gonetzero@energize.com, then we'll compile the helpful summary responses to how people can tackle those and share those as updates that can go alongside the tool on the site that it's held on.
Thanks, Simon. Yazia, you have your hand up.
Yeah, I was just going to say to the question regarding if an institution already has some part of their cost available, there is a way to do that on an institution level on the calculator. So if a person wants to put in maybe a reduction of 20% that they already know that they've achieved, the calculator allows you to put 20% of my reduction program implemented, and therefore reduces the cost by 20%, for example. So it can be done on an individual level. But just to follow on, Peter's actually mentioned that he was thinking of it at a sector level rather than individually. So he's mentioned, scroll down at the bottom, he just said as we start to get better ideas of actual cost, that would allow Energize to refine the tool by having a wider sample of data and would make the outputs more robust for us all. Is Energize engaged on an ongoing basis to keep improving the tool?
Yeah, I think just in terms of kind of underlying kind of feedback pieces, I guess just to summarize on that one, and I mean, kind of Fiona, we obviously picked this bit up as part of the EAUC conference, is that I think the collective desire is to evolve the insights and feedback that come from this so that the sector does gain a stronger set of insights. I think follow-on communications will clarify exactly how that's done as we gain the insight from everybody about how everybody will use the tool. But I think certainly it was one of the pieces of feedback from the AUC conference that it would be useful to get, as people get, you know, once we've got to a situation where, say, 30 institutions have published their final like number and shared it for everybody's consumption, we can collectively affect is the wrong word, but I think everybody knows what I mean. The outcomes of what's in here in terms of benchmarks, because if you've got that more fully worked number that's each institution has applied their own reality to it, then there's going to be a lot more insightful than the position we're in, which is having to take a kind of national policy framework and apply it to a set of carbon footprint data rather than kind of individual real strategies. So Fiona, I don't know, just to follow up, if there's anything specific you wanted to add on that beyond from the AEC feedback that was a few weeks ago?
Yeah, absolutely. I've actually replied to Pete on the chat as well. That is the crucial thing. As much as each institution can share their own costings, we can then better refine the data and share that with the wider sector. So, but that basically does come back to you lot in terms of being able to be willing to share how you've costed and what you've costed in terms of your own costing plans for net zero. So the more we can share, the better we can all get together and help each other. So that is basically an onus back onto the sector to try and do that. There does seem to be a reticence at the moment, and I fully understand that. You know, it is a bit of a looking into into the future. Nobody knows. Nobody does know the answer, definitive answer. Prices are going to go up. Prices are going to go down. Some things haven't even been invented yet. You know, so by the time we get to that, it is going to be different. But the more that we can share where we are right now, the more we can refine that data.
That's great. Thank you both. One of the early slides picked up a reduction in student commute as part of the overall reduction in carbon footprint. Are we suggesting there's going to be more online learning?
Kind of. Let me explain that one in a little bit more detail. The national policy assumptions are that there will be a progression over time to more remote working, and within that, learning in the overall equations in terms of what's in the modelling of surface transport for the country as a whole. So I think it's probably better we take that away and provide a more considered answers that within the FAQ so people can understand what that actually means as an assumption. But if you were to get under the bonnet of what's in future energy scenarios in the 6 carbon budget, the answer is there is a progression of the avoidance of travel as well as the format of travel. There is also decarbonisation of travel. And I think if we can just summarise what the assumptions that sit behind that are for everybody, that probably is going to be a bit more helpful.
Fantastic, thank you. And a question about procurement, asking, not seen costs before, so just asking where is the best place to find out more about this, or if you are able to summarise, is it effectively just that the cost of goods will increase as costs of reducing carbon footprints of products and services? I can see the list in Scope 3 opportunity table, but it's still not clear.
So the figure we've attached to the procurement side of things is taking a kind of macro analysis of various sectors about what would be the additional cost to support them in decarbonising. Some of those sectors will actually save money by decarbonising, therefore there shouldn't be a cost to you, but there is a marginal cost difference in other sectors in terms of the overall structure to it. So what we're estimating within there is effectively, for want of a better description, the insetting cost that may need to occur into the sectors that are common supply to the sector overall. Again, happy to explore in a bit more detail in an FAQ piece as a follow-up.
And a similar question around supply chains, but are the assumptions behind our cost per tonne decarbonising the supply chains, are there different expected costs for different product categories, and if so, what's the logic behind that?
I think that's probably one where we'd need to expose more than there's currently in the report or the calculator. Yes, there are different assumptions for different sectors, and I think there's an element where there would be a kind of there's also always an element where things are more accurate when they're averaged on a policy scale, that the individual points might be more variable. But I'm happy to kind of express the underlying assumptions and overall points in responding to that FAQ a bit more about the sectors of the economy we've included in that as being common suppliers to this sector. So be that IT or building materials or whatever it is in terms of like the different supply categories overall. We can but yeah, different sectors have different positions in terms of what their cost is. Arguably, some sectors, because it's about marginal differences, some sectors are better economic performers if they decarbonize. So logically, they shouldn't be passing that cost on to you. There are other sectors that have quite a significant investment they've got to make in themselves to decarbonize. So we just need to expose one more level down of the data, which we can summarize in a follow-up note in the FAQs.
Thank you. I'm going to begin to summarise now. So if there is a particular question that you feel like you want me to raise, but I haven't, please, if you just raise your hand and you can come in and ask that question. But essentially, in summarising, just a huge thank you to everyone that's been a part of this project, to Energize, EAUC, and to the BUFDG. And really, it's now go away, read, have a read of the report, have a play around, see what you can do with this. If you've got any questions, do engage back in with your membership association. And if we can't help you, if it's more technical, we'll pass it on to Energize. Kezi did give the Energize email address in the chat, which is gonetzero@energize.com. So please do also engage with Energize if you have any questions about the tool and the kind of the data and the methodology that sits behind it. But it's been a pleasure to have you all on the call today. All the very best with your net zero carbon journeys. Do keep in touch, do keep networking, and as a sector, I'm sure we can make great steps in pushing forward. Thank you very much for your time.